From the morning reading, broad markets pull back on light volume Wednesday. Breadth weakened compared to the prior session as decliners led 1599 to 1416 on the New York Stock Exchange and led 1714 to 1048 on the Nasdaq. On the S&P 500 snapshot, a modest loss in the second narrowest intraday range of 2016. Major U.S. equity indices spent the day in a shallow red. Benchmark S&P 500 hit its 0.02% intraday high shortly after the open and sold off into a narrow intraday range. The selling accelerated in the final hour and the index closed with a 0.25% loss. The 0.27% intraday range was the second narrowest of 246 market days so far for 2016. Everything is fine. Options traders have priced in a historic level of complacency in the short term relative to what they think is going to happen in the longer term. The term structure of the VIX fear gauge has collapsed and is well beyond the threshold that has consistently preceded big jumps in volatility. On average, the VIX saw a little more of a decline, but jumped over 75% over the next several months. Part of the reason is seasonality. We're entering into what is usually an extremely low volume, low volatility period as traders leave for the holiday. Options also suffer time decay due to fewer trading days. Even so, the VIX has tended to rise into year end. No reason to buy gold either. Sellers have been persistent in fear trade assets with gold bearing the brunt of it. The GLD fund has seen demand dry up so much that the number of ounces of gold it holds has declined or stagnated for 29 days. In the fund's history, there have been 8 streaks that match this, but all but one leading to rallies. Country ETFs have been getting hit. The Optimism Index on the Australia fund, EWA, has dropped to 9, its lowest since last September, along with Japan, EWJ, Canada, EWC, and Brazil, EWZ. The funds are the only ones with green highlights in the seasonality and trend screens, meaning that they are showing excessive pessimism during the time of positive seasonality while they're above their 200-day averages. In other news, stock rally remains stretched. Average directional index for the Dow signals that rally is vulnerable to a setback. The same is true for the other market leaders. The 20,000 milestone for the Dow may be prompting some profit taking. ADX and RSI lines issue warnings. Last couple of messages have repeated the idea that the post-election stock rally looks stretched. Last Friday's message showed the stock-bond ratio, the value-growth ratio, and the transportation-utilities ratio also in overbought territory. Momentum and seasonal factors are helping to keep the rally going, but a lot of technical indicators are showing the market to be in a very overbought condition. The 14-day RSI for the Dow Industrials is at an unusually elevated reading above 80. It's another indicator flashing a short-term warning. The directional index lines, the green DI line is above the red line and the trend is up. These two lines turned positive during election week and remain so. What's concerning is the fact that the average directional index has risen above the green line. That's usually a sign that the current trend is vulnerable to a setback. Any downturn in the ADX from that elevated level would be a more negative sign. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:14 a.m. Mountain Time, and I am recording this in preparation for the market day of December the 22nd, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's go ahead and dive into the morning report. And at the time of this cut, all 4 of the U.S. broad-based indices were rotating around scratch on very low volume in the overnight session. Crude oil is down about 0.5%. Euro's up just above scratch, as is the long bond, and gold is down just below scratch. In China, it is just above scratch. Hong Kong's down about 0.75%. Japan, Germany, and the United Kingdom all rotating around scratch. Very, very low volume across all these markets. And Thursday, in U.S. macroeconomic reports of note, we have core durable goods, GDP, weekly unemployment claims, durable goods orders, core price index, personal spending, and the nat gas report. So a very long slate of macroeconomic reports on schedule for today in the United States. Tomorrow we have new home sales, University of Michigan consumer sentiment, and that will round out the week into the holiday weekend. In terms of current volatility, our short-term VIX has dropped even lower to a 9.33, and skew is down below the warning threshold, so in a benign setting. Well, there we go. That report had a couple items in it that hadn't gotten updated, so we got those fixed. Anyhow, short-term VIX 9.33, skew less than 125, below the warning threshold. IV percentiles all exceptionally low. S&P an 8, the Russell a 12, a NASDAQ an 8, the Dow a 10. No standard deviation moves were put in on any of the four broad U.S. indices yesterday. And let's go ahead and bounce over to the charts. On the S&P futures, we continue this sideways consolidation pattern. Really no serious challenge to a close above, nor any serious challenge below. I suppose some people might draw a diagonal support line across here, which would have been broken yesterday. But frankly, I really see this as a sideways consolidation, and the most appropriate thing is to draw a box around that and look for a breakout above or below the range of this activity. And certainly we've seen these bodies get smaller as we've led up to the Christmas holiday weekend, and very much expected. While certainly volatility is certainly very, very low, and we could always have an expansion in volatility given some sort of impetus and new information or energy or momentum to be able to make this move in any serious way. The volume and the number of participants in the trading right now are not likely to get any kind of significant follow through. And the Dow, very much the same pattern. NASDAQ, very much the same pattern. Russell. So all four of these are in sideways range-bound consolidation that is very typical of the seasonality that we're experiencing right now. Remember, the seasonality is sideways, low volume, consolidation type patterns with a slight bullish drift. In other markets, crude oil has been falling back a little bit after the breakout, but we're waiting to see if this general area of support around the 52 can hold, and if we continue to be moving in a more bullish direction above that old resistance. So far, we seem to be coming back to test once again, but nothing serious in that volume. Gold also continues to have a bit of a short-term consolidation, though continues to look quite weak. And then finally, let's take a look at bonds. Bonds also sideways consolidation. The dollar in sideways consolidation. Just about everything has pretty much gone to sleep in the markets at this point. And VIX. We'll finish with the VIX. VIX yesterday took out a 52-week low, went under 11, and so far today is playing just above the 11 handle, so exceptionally low volatility. Okay, let's go ahead and go to the daily report. Not much change from yesterday, and with these kinds of trading action days, we're probably not going to see a lot of changes. Probably through next week would be the probabilities. Intermediate term phase opinion, market phase 4, price patterns near resistance or extension patterns. That's bullish though. The 3 market timing signals, the first one from IBD, confirmed uptrend. The second one, GMI index, a perfect 6 out of 6 with a buy signal in place since 11:10. Stock charts decision point scoreboard also has been improvingly bullish. Short term, intermediate term, all very solid in the bull camp, with the long term being the mixed signals. Position sizing opinions both coming in at 100%. Intermediate term market posture, all exceptionally strong bulls across all 4 of the indices, and this is further supported by this strong bullish sentiment line. Hedge warning status remains 0+, normal with some elevated conditions. We continue in the strategy opinions to have the warning in the option income strategies bucket that the VIX is below the acceptable range to initiate new positions for novice traders. That's a reference to the fact that we're below a 12, and at that level, the amount of premium that's being paid versus the amount of risk that's being taken on is starting to get skewed. In terms of particular warnings, we have still several of these volatility-based warnings that represent this very low volatility environment with the expectation for eventual expansion in volatility. You have the distribution day count on the NASDAQ still at a 6. Trend-based, everything was fine, though on the intermarket risk aversion indicators, we now have all 5 as risk off. And we often watch this to be a kind of an early signal of a turn, and this could be setting us up for a bit of a retracement. So we'll watch this very carefully and see if we start to see, especially as we exit the holiday period, an increase in volatility and some weakness coming into the market. Sentiment indicators relatively benign at 5 for the short term, 7 for the intermediate term. You see the fear and greed index is a 74, so now dropped out of the extreme greed area. In terms of sector-specific activity, pretty much as you would expect in a small range day, and indeed one of the morning authors mentioned it was the second smallest range day of the entire year. Expect more of the same coming forward, but you see very small increases or decreases really. Really only real estate did anything significant yesterday, down over 1%. And we're continuing to see weakness in healthcare, some weakness starting to show up in retail and transportation in terms of our market posture by time frame. So I think that'll be enough for today. Very, very quiet market, so not a lot to get excited about in our analysis. I'm going to go ahead and roll this thing up. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink at the bottom for the full set of disclosures. We'll see you back here for Monday's market preview from Falcon Global. In the meantime, manage that risk profile and then also seek to learn something about your trade craft each and every trading day. Good trading out there.